The investment firm has overhauled its management since the contentious departures of both Bill Gross and Mohamed El-Erian. Well, earlier I sat down with Pimco CEO Doug Hodge and asked about concerns that large asset managers like Pimco, or BlackRock for that matter, pose a systemic risk to the financial system.
If you look at how the regulation has been formed over the last several years, whether you're talking about Basel III or Solvency II or Dodd-Frank in the United States, it's oriented around the safety and soundness of balance sheets, because it was indeed the balance sheets of the banking system primarily, but if you throw in AIG, you could argue, perhaps some of the insurance balance sheets, but really about the banking system that were compromised. And of course, the bailouts ensued and TARP and so forth. So the regulation has been oriented around the safety and soundness of balance sheets, which makes perfect sense. Mm-hmm. When you come to the asset management industry, we don't operate off of a balance sheet. What we do, as our role as a financial intermediary, is to help others invest portions of their balance sheets. So a defined benefit pension plan, or a sovereign wealth fund, or an individual investor who puts part of their savings into a mutual fund, all of those monies are invested in the capital markets with very clear mandates, guidelines, boundaries around how those monies should be invested, and I think that is a significant difference than a bank or an insurance company. Our role in the financial system is as a service provider rather than as an institution that provides a balance sheet.
But what if, though, Doug, there's a liquidity crunch, which we've heard lots of warnings about? What if there's a liquidity crunch and you start to see runs on mutual funds? What about then?
Well, I think you have to step back from that for just a moment. In the 75 years of the mutual fund industry, there has never been a run on a mutual fund. And mutual funds are clearly, in terms of their structure, clearly different than a bank. There's a reason why there's a run on a bank, because the last depositor may show up at the window and not get their money back. Mm-hmm. That moment when the bank runs out of money. But a mutual fund doesn't have that risk. The price at which you may get your investment back may be lower than what you had wanted or expected, but a mutual fund holds assets for every shareholder, for every investor in the fund itself. The price of those assets, as in any capital markets product, moves up and down with markets and depending on the investments that they hold. But that's a very different structure, and hence a very different relationship that we have with an investor as compared to a bank has with a depositor.
With their depositor. And haven't you used in the past, though, the example, of course, can't turn a corner and talk about Pimco without talking about Bill Gross, but you've used the example before about how the redemptions from the total return fund, the fact that you've seen months and months of redemptions and the fund has still been able to operate and it's still, functioning and you've been able to stabilize that is an example of how Pimco and others are not systemically risky to the markets, right?
Well, I'm very proud as the way we have performed. And yes, we have had withdrawals and redemptions from our mutual funds, particularly the Total Return Fund, the big bond fund that you refer to. But even during that period of heightened withdrawals, we've been able to deliver category-leading performance. And I think that just speaks first to the markets themselves, but also to Pimco's capabilities in managing those withdrawals.
It's been 9 months, right, since Bill Gross left, I believe. What have you been doing as the CEO to try to kind of stabilize the internal environment, but also to speak to clients and say, you're back on the right track?
The arrows at Pimco are pointing up. There was certainly, we had some work cut out for us, but our team has been stable. The integrity of our investment process is in place. We're delivering strong performance, and our clients remain loyal. So I couldn't be more proud of our team and the way we've performed over the last 9 months.
And there was, before we go, a story that Bloomberg put out that I thought was really interesting. It was an interview with Bill Gross, where he said, every day at 3 p.m. he looks at Pimco funds. If he's doing better, he has a good night. If he's doing worse, he has a bad night. When you hear that, what do you think?
At Pimco, our charge is to deliver performance to our clients, to our investors, and that is at the core of everything we do, and that's the core of our culture, and that hasn't changed.
So that was Pimco CEO Doug Hodge, and
great get. By the way,
it was very interesting. You know, he had not spoken to Bloomberg Television before as the CEO. He did do an interview once when he was head of Asia, because he was actually in Asia when Mohamed El-Erian had called him back to become the COO. But you can see he's a very different kind of personality from a Bill Gross by many
definitely
means.
From Bill Gross,
and also from Mohamed El-Erian, right? I mean, you know, and it was funny. We were on stage at this panel, this Toronto forum, and you know, I'd asked him, look, you know, it seems like you're a bit different from Mohamed. Mohamed was all over TV, and he writes articles and op-eds. You know, you're not like that. And he kind of gave a little laugh, and he said, well, television is very unforgiving.